Hello and good evening, friends, or I should say happy Sunday and good afternoon for you guys in the States. Hope you guys are doing well. Hope you guys had a great trading week. We haven't been with you guys through the month of June, so we are excited to be back. I will just give my co-host a couple moments to tap in and, of course, to wait for Instagram to let you guys know that we are live. So for those who are coming into the chat, let us know where you guys are tapping in from and how you guys are doing. And let me know if you can hear me. All right, let's see if Instagram will get us going. Hello, friends. Let us know where you're tapping in from. I see Oklahoma in the house. Hello, friends. Tell us if you were trading last week, if you were trading, what you were trading, and how you guys did. We had a great trading week in the Discord ourselves. One of the big things that, many of you guys who watch or check out the Instagram, you guys know that a lot of the trades that we take are specifically systematic trades. We have a number of them that we take every single day or once a week. And they have just been really productive for us. They kind of remove all the guesswork and allow us to tap into the same trades every single day. So all of our members can participate, even if they're not able to be in the Discord every single day, but they know how to take the trades. And if they have any questions, they can always come back and ask. So yeah, last week was great for us. It was low volatility, so much easier to predict direction for the day. All right. Let's see how long it takes Instagram to tap us in. Instagram likes to be funny with us. Hello, sir. How are you?
Hello. Get this right.
Yep.
All right, good to go.
How are you doing? Congratulations on your new show, by the way.
Oh, thank you. A shout out to Quadri and Dre. Those are my co-hosts, or my co-hosts and community members. So big ups to them. But yes, thank you. It's going really
I
good. We're
see
getting some
Dre
good
is in the
feedback.
chat, so
Huh?
I said I see that Dre is in the chat, so I expect him to be giving you all the
Oh,
fire
he's in there.
emojis.
Yeah. Shout out to my guys. But yes, we are excited about that. Getting some good feedback on it. Hearing a lot of good reach outs. So yeah.
So tell us about your show. I know you're trading futures,
Mm-hmm.
um, you and your co-hosts,
Mm-hmm.
and how many times a week do you guys go live on YouTube?
So right now we're live 2 days a week, Tuesday night and Wednesday night,
Mhm.
and really, it's live trading. So we're taking live trades, whether it be trying to pass a combine or on your funded account, right? So it's specifically geared towards futures trading, right? So I would say we're definitely trading like scalping, smaller time frame type of trades.
Mhm.
But not only are we live trading, good conversation, right? Teaching moments where we're breaking down different levels, things that we're looking at. There's some general market commentary, not as much as like I used to do.
Mhm.
And then it's just good old trade and investing community talk, right? Where we just talk about, different things, different methods. It's live, so we interact with the people who come on to the live. If if you got questions, we'll answer
Mhm.
it. We do different little breakdowns. So yeah, it's a good vibe.
Yeah,
One of the
I've heard
things,
great things in the background. I've heard great things. Those who are able to join. It's a little bit late for me because it's like the middle
yeah,
of
or
the
yeah.
night
If
for
you like,
us.
if you are overseas, it's definitely late because we start at 7:15. So
Yeah,
yeah, it's probably what, like 3 or 4
but
in the morning your time, 2 in the morning.
yeah, exactly. It's
Yeah.
yeah, it's. I think it's around. Let's see. The normal market closes 5, so it'd be midnight. Yeah.
Midnight.
So
Okay,
that's,
yeah.
yeah,
So yeah, you
I
are
have two
catching some
small
Z's,
kids.
right?
Yep. If I'm not catching them at that time, Lord knows I'll be catching them when the market opens the next day.
Right.
So, but congratulations, you guys. I was actually wondering, did you pick trading Asian market over when some of the other markets? Was it because of the time frame that you guys
Absolutely.
could trade? Okay.
Right. So absolutely. A few people have asked that, like, do you guys only trade the Asian, or why did y'all pick that? I mean, primarily, no, like first question, no, we don't only just trade the Asian session, right? We do trade during open hours, some New York times. But the main reason we picked it is because just, I mean, the time, right? I mean, I'm sorry, I'm just not gonna, who's waking up to do the London trades? I mean, for me, I would have to wake up at like 3 or 4 in the morning. And like you said, I got 2 little kids. That's just not
Yeah.
going to work, right? And then Dre, my other co-host, he got 2 little girls, right? So he not about to be up all night either, right? So that's just the time that works from 7 to like 10 is that
Mhm.
optimal time because like you said at that time once it hits about 11, 12, like all right, I gotta get some sleep.
Mhm. Yeah,
So,
because I
but
mean,
yeah,
the nice thing with Asian is that sometimes if you can catch a nice move, you can just be the whole, if you set up your
you'll be done
OCO
for the day.
order, yeah, you can just
Yeah,
have a
like
nice, smooth action into the night. So,
yeah, yeah,
so it's
yeah.
a
I mean,
nice
it
time
is.
to
I will say
trade.
it is
Not for
typically
me.
slow, right? I will
Hmm.
say Asia is rather slow. So if you are new to futures and you prefer a slower market, Asia is good for you where you can get your feet wet, stuff like that. It's not a particularly big range.
Hmm.
So there's some advantages and disadvantages. So, but yeah.
Yeah. So, if you're a new trader and you want a slow market, you should try out 8:30 to 9:30 a.m. Eastern Standard. Oh my
Right,
God.
yeah, it's at night. Yep.
You,
Seven
thank
fifteen to
you.
10 p.m.
You can get your 200 points each direction if you catch it right. So, no, thank you. I don't need that much
Yeah.
volatility in my life. So, I mean, this week, okay, we're in the summer season. Sell in May, go away didn't transpire. We haven't had a massive pullback. We've had some digestion, but no fall apart in the market. Um, we haven't had any rate cuts. Inflation didn't go crazy because of tariffs. Tariffs has seemed to be kind of a nothing burger. Um, and even though we were like at the edge of World War III, we were at World War Zero, so that seems to be whatever as well. So, everything has basically come to almost be like a satire. You just feel like if it's supposed to be nonsense, it's going to do nothing. And if it's supposed to be nothing, then all of a sudden it's going to be the Epstein list, right? Suddenly it's going to be like the focus of the conversation. So you just don't really know anymore, like what's real and what's not. But I mean,
Mhm.
from your point of view, you're in the States, you know, you have an advantage and a disadvantage. You get all the smoke and all the noise. And being here in Europe, I don't get any of that, right? So I really only get what's been like filtered 100 times over. Now, that's sometimes really good for me because I don't end up being like overwhelmed by what's happening in the markets. But
Mhm.
then also there are nuances that are like building up. I don't, I'm like the frog that's like slowly boiled in the pot. I just, when things are dynamics are changing, I don't feel them like that up front, and
Right.
you get the opportunity to. So what is sticking out to you as like things people might be missing or are really important as we go into like the rest of the summer of July and August?
Um, Great question. Great question. So I think you just kind of laid it out perfectly, right? In that the market has been really resilient. Um, ever since the April low or the Liberation Day scare, everything that has been thrown at us, noise or whatever, the market has been pretty resilient and absorbed it pretty well. You know, I mean, there has been a number of things that a logical person would have thought, you know, would have spooked the market or would have caused a little bit more volatility. And I mean, we've had the bouts, but it's getting bought up immediately.
Mhm.
Like it's not lasting very long.
Mhm.
So what stands out to me is how many people or how many, I guess, yeah, how many market participants continue to fight the trend. All
Mhm.
right, like every week, it's a top is coming, and we just keep chugging along, climbing that wall
Yeah.
of warriors,
Because somebody was
like I like to
asking me
say.
like, do you know, is this the top? And I'm like, the market can be irrational way longer than you can be solvent.
Correct.
Like none of us have enough money. I mean, there are billionaires that lose money in the markets. So if
Yeah.
billionaires don't have enough money to move the market in the direction they want, we can be a little bit humble and let the market tell us when
Yeah.
it has put in a top or put in a bottom. You know, you're
Yeah.
like on those April lows, even if you would have missed the very, very bottom, you still got a massive rally. There was still money to be made.
Yeah.
But you know, if you were trying to catch the bottom the entire way down, whoo, you might have gotten
Yeah. Yeah.
wrecked.
You had a nice little drawdown. You had a nice, but now it's back.
Yeah,
So
you wouldn't have
I
cared
mean,
anymore if you
yeah.
held it. That's
Yeah.
the
If you
thing is
held,
that
right, you had to hold.
if,
You had to hold.
if you held it. So,
Right.
um, yeah, but yeah, I agree. You know, I think that this, like these last months have taught us a lot about the fact that like, you know, you really like for volatility to matter, you really need things to come out. From left field. It has to be, you know, like even tariffs probably wouldn't have spooked the market so much, but it was that weird cardboard dysfunctional list of like, you know, every country had a different rate and some were way higher than people expected. And people are like sitting there trying to read this tiny thing and then like understand what it means and how it's going to be applied. And, you know, just the theatrics of it that created a lot of that volatility because it freaked people out.
Right.
But unless things happen like that, where everyone is kind of looking here and then something crazy happens, doesn't impact the market. Like even just the whole confrontation between Israel and Iran, everybody was freaked out. But the thing is that they were literally telling us exactly what they may or may not do days in advance. So every
Right.
like any area of the market that may have had some kind of response, everybody was able to kind of prepare. I think, um,
Yeah.
you know, and
It was well telegraphed.
that's the word that I was looking for. Um, so I think yeah, it's just one of those things that everybody was expecting like some surprise thing to happen, but actually there was never, and nothing jumped out of the cake. It just was the cake that was sitting in front of us.
Right. Mm-hmm. Mm-hmm.
So, but going into the summer, I don't know. I don't have any like, I mean, I don't foresee any like crazy information. I think that, you know, Trump obviously wants Powell to resign, and Powell wants to, you know, keep things calm and, you know, keep things chugging along at an even pace. Um, but I think that if either of them saw something funny happening or like bubbling under the surface, like crazy CPI data or crazy PPI data, they would front run it. I think they've been really good at Trump doesn't front run by telling you something bad's happening. He front runs it by distracting you with something else. So, you know, CPI might be horrible, but he's going to tell you about the Epstein list like 15 minutes before that comes out. And then every
Right.
MAGA person is going to be pissed off about that and forget about CPI and PPI data numbers, and
Right.
everybody's going to move on with their lives. But what are you expecting in the coming weeks with CPI and or the coming week with CPI and PPI?
Um.
Or do you
So I
think it even
think
matters anymore?
I have to be honest. I really don't. I feel like so the narrative around inflation is that it's the fear of what is tariff going to do, right? What are tariffs going to do? If tariffs were not uh, in play, then inflation wouldn't even matter. Like literally, Powell said, if it wasn't for tariffs, I would have cut rates already, right? Like
Hmm.
inflation is in a good place. It's it's been in a kind of a good place for a while. So here's what I will say is that I saw recently that the Treasury had like a surplus, right?
Hmm.
Or like something happened where they had a surplus because of tariffs. And I asked my community, I'm like, well, uh, what tariffs have actually been implemented? Like, all we hear is a bunch of delays and noise, and it's like, well, what has actually been implemented for them to have a surplus? So I talked to my good buddy Chat GPT, and so I got a quick breakdown here. So there has been some tariffs that have been implemented. So you got the steel and aluminum, you
Hmm.
got cars and auto parts. The universal 10% reciprocal was actually implemented. So a
Hmm.
lot of countries are actually getting hit with 10%. All
Hmm.
this other, the boards and the letters, all of that's kind of like extra, right?
Hmm.
He has done some country specific tariffs. The China 30% tariff was actually real, and then Canada and Mexico. So they have been bringing in some tariff income. That's actually real, right?
Hmm.
It was saying 100 billion in custom and duties was collected. You had in June 25, duties peaked at 27.2 billion, giving us that surplus. So yes, some tariffs have been implemented, and so should we start to see that impact on inflation? Maybe, but it's not in the areas where you would have thought it. Like housing probably isn't impacted too much by that because we're thinking more wood and stuff. So the Canada stuff hasn't really went in. And I say all that to say that the expectations for this week is we might see a slight increase.
Hmm.
If it does, the real question is, with this slight increase, how much does it change the Fed's path? It doesn't, because they keep telling us we're waiting to see what this tariff stuff do before we cut. So, okay, if inflation goes up a little bit more, that's their excuse. This is exactly why we haven't cut yet, right? Like, it's
Hmm.
not going to change anything. Like it's not going to change nothing. So, in my opinion, I don't think these CPI, this inflation data, is going to make that much of a difference this week.
Hmm.
I think on top of that, I mean, I'm pretty sure we're going to talk about it, but this week there's a lot, right? And this inflation data is just one part of it. I mean, earnings
Hmm.
season about to kick off. We got retail sales, consumer sentiment is OPEX week. We still got to hear. I mean, clearly on what was it this weekend? He did the whole EU and Mexico, or was it what was it? EU and Canada
Hmm.
tariffs, but EU comes out and says, "Well, we already knew, and we're basically negotiating." So it's one of those things where it's like we said, it might even be priced in. Like we
Hmm.
might see the futures open with a gap down and then it get bought up, right?
Hmm.
Um, so I don't know. I think something you said is that's where I'm leaning, which is there's too many known factors, and the thing that's going to rock the market, we just don't know yet. It's going to come out of left
Hmm.
field. Maybe it's Powell resigning, and then that kind of spooks the market because we'll be in a little bit of a limbo land. But
Hmm.
at the same time, I think that the market jumps to assumptions and says, "Hey, well, if Powell's resigning, clearly Trump's going to put somebody in there who's going to do rate cuts, and then what's to really be spooked about?"
Hmm. Yeah,
So I
it
don't
only gets
know.
better from here.
Yeah, right. So I'm just I'm on I'm of the thought process that whatever the excuse is, and shout out to people who know me, I have adopted a new saying this year, which is by any excuse necessary, right? So Malcolm X used to say by any means necessary.
Hmm.
I think the market will find any excuse necessary to do the movement it wants. That's why I've been telling folks just focus on price action and what it's telling you, because the market will cherry pick whatever it wants, and then
Hmm.
we as people who look at the market will say, "Well, it was this or it was that." It doesn't matter what it was. We always find out after price makes the move, and then we say, "Oh, this is why," not
Hmm.
"This is why." price moves. No, price moves, and then we say, oh, this is why I did it. So by any
Exactly.
excuse necessary. So at this point, I don't know what the excuse will be.
Mhm.
I think it's definitely something that comes out of left field, like you said.
Mhm.
I don't see it being CPI. I don't, yeah,
Yeah.
it's
I
just
I
it's gonna
agree
be
with
something
you.
that completely catches us off guard.
Mhm. I think so. I think one of the things that people keep forgetting is that, for decades, you know, people had a lot of discretion in how they invested. I mean, even like a 401k and a Roth, you were not automatically subscribed to those things. It was actually they passed the law, the Pension Protection Act is something like that, and that's essentially where every company was obliged to add all employees to whatever their 401k plans were. And and so you had to opt out. So the law became people had to opt out. And so before that, there were, when you had things like the Sharpe ratio was determined, and a lot of the indicators that we use, like Bollinger Band and this and that, these men were creating these indicators because individuals had a lot of power over how and what they invested at what levels and what percentages. But once the Pension Protection Act came out, and basically I mean, you can choose not to participate in your 401k program, but for uneducated people, they don't even know that they're participating. And what are they buying? Mostly this, the
Target
S&P
date fund.
exposure and bonds. And so a lot of the flows that we see are just this like consistent rebalancing and then money management coming from all of these pensions. And as long as we don't see a massive like heat up of labor information or massive firings or things like that, those flows are just there's I mean, I think they said, in like before 1991, passive investment was 1% of investment, and today it's more than 50% of investment.
Wow.
So, I mean, it's, those legal obligations of having to be long the market by money managers, pension funds like being systematically there for those monthly rebalancing. I mean, it's really tough. Something has to really scare like money managers to make them sell positions. That's like two totally different things than like just the average person is like, I don't know. I mean,
Right.
Nvidia is high at 150. Do I stay to 160 or do I, like that's
Yeah.
not what these people are doing. And they have major like legal obligations in participation.
Yeah.
So, I think that's part of what people have been, underestimating is the power of employment and just the consistent power of that reinvestment. And the fact that few people, like pensions don't just get out of the market so easily.
Mm-mm.
So until I think we start to see like employment numbers do something really dramatic,
Mm-hmm.
we may just continue to see this melt up.
Yeah. I mean, you nailed it. I mean, everybody's been waiting to see unemployment rise, and it actually went down the last NFP report. Like, it's been pretty consistent at this 4.1 number, and as much noise is in the media about layoffs and things like that. We ain't really seen it in the numbers. Like the job market is, I mean, have we seen job openings come down? Sure. Have we seen like unemployment claims? I can't even say unemployment claims have really risen. It's been just pretty steady. You know what I
Yeah,
mean?
everything has been steady.
Yeah, like unemployed. I mean, okay, last Friday, NFP. I mean, after the private came out negative, you just knew everybody was like, "Oh, this NFP is gonna be so bad." And what happened? It came out better than expected. Like that's why I always tell people: do not judge non NFP non payroll based on the private data.
Hmm.
They are completely different data sources,
Hmm.
right? Like the way that the private does their numbers is completely different from NFP. So you cannot use one to judge the other.
Hmm.
Um, so, I mean, yeah, I think you definitely bring up a good point in that like unemployment or not employment is, I mean, it's still pretty good.
Hmm. Yeah.
So, like you
And I
said, them
think that
flows gonna come in.
and then the flip side is that because the market is doing so well, you continue to have boomers retiring, and they take up like their salaries are massive. They're the ones that have moved up the chain and are getting those higher allocations. Um, and really a lot of the unemployment is in young graduates, like
Yes,
people without work experience. And
correct.
so as you have like for one boomer that rolls off into retirement, it allows companies to bring in two or three, young
Yep,
employees.
young
And if
entry
they,
people. Yeah,
yeah,
yep.
um,
Hmm.
and then that actually boosts the economy because when people go into the retirement, they start receiving Social Security, Medicaid, they can draw on their retirement accounts, blah, blah, blah. So they
Hmm.
actually have an ongoing income.
Hmm.
And now you have new people who are actually starting to receive a salary that didn't.
Hmm.
So I
Hmm.
think that there's some shifts that, you know, that can continue to force us to melt up, whether the market, like whether the human being intellectually like wants to accept that phenomenon that we can go
Right.
from like this like 6,200 all the way to like 6,500 by the end of the year. But I mean, it is plausible.
I mean, let me add something to that, right? I think, and this will definitely help convey what you're saying. And I remember this from a few years back when the shift was happening. I think one of the things, like you said, people don't want to believe, but here's what is actually true. The millennial generation, as well as some Gen Zs, we are now becoming the dominant workforce. We are now getting to peak earning years. We are now we are becoming the new like people in power basically, and
Hmm.
this is going to last for a good minute, you know what I mean?
Hmm.
And so when you have a whole entire generation starting to earn more money, becoming adults, children, all of that, that is why I never will forget early on when shout out to Mark was talking about the roaring 20s. I understood the vision in that. But the beginning of Roaring Twenties, I'm thinking about me and all my friends and how we making more money, we're doing more things, we're investing more. It's only going to continue as more millennials and Gen Zs come into it. Not only that, think about and everybody's talking about this, the transfer of wealth. To your point, the boomers and those who
Hmm.
are retiring or i.e. passing away, that money is going to the millennials and the Gen Zs. And what are they going to do? We're going to put it into crypto. We're going to put it into the market. We're going to just reinvest all of that money that the boomers and them are leaving to us. So it's so like you said, the melt up can certainly continue because the transfer of wealth is happening.
Hmm.
So yeah, like whether you want to
And
believe
I
it or not, I mean that's
and
just
this
what's happening.
this might just be like from a personal experience. When I was really, really young, I remember when automation first started to come into manufacturing. I had an uncle that was working in manufacturing, and then they brought in they brought in a lot of automation, and so he was allowed to take early retirement. They basically comped them to leave early, and he was really frustrated about that reality, that and but he was also happy to get the early retirement.
Right.
I think our generation, we have always seen, my mom calls it the presentation of the washing machine. We understand that, like, I don't need somebody to come and wash my clothes by hand. And when I'm in Cameroon, I literally have to have somebody come and wash my clothes by hand because everything still is washed by hand. I don't
Mm.
need to have somebody wash clothes by hand. I have a washing machine. We
Hmm.
have we have the realization that a washing machine will be created. And now we have a washing machine plus dryer that's created. And in 6 months from now, I don't know, maybe my washing machine will also be an air fryer, but somehow like we are ready to accept those incremental changes of how development and productivity and AI and technology are being presented to our lives. Now, to this point, we've been able to accept the speed and integrate it, just like your joke, like, oh, and then I asked Uncle Chat GPT. 1 year ago, I'm sure not that many people were saying that unless they were like working in an engineering field or something like specifically relating to AI and so forth. But
Hmm.
now it's become the Google it of our generation. Did you grok it? I don't know. And
Yeah.
and I think that that also helps us, like for instance, you talked about like investing in crypto. When, in 2017, when I was asking people about crypto, nobody knew that what that was. That was like a non-starter conversation. It just the people like thought you were talking about aliens.
Yeah.
Quite literally, like when you talked
Yeah.
about Bitcoin, people thought you were like trying to explain how the pyramids were built. And
Yeah.
now it's just like a normal part of conversation. I mean, I
Yeah.
have people asking me about like ultra meme coins. Like, oh no,
Yeah.
is that a stable coin or is that a meme coin? What's the difference? How do you analyze? I mean, these are not conversations we were having 6, 7 years ago around a normal table of mixed company, unless it was
Hmm.
like, oh, somebody I know already knows about that. So I think that you're right. Like, we're not only coming into power, but we've also watched how wealth has become so concentrated, and that concentration has existed between two people, investors and entrepreneurs. And when those two worlds kind of mix and match, that's when you're able to achieve that like generational wealth. You start
Hmm.
thinking differently. And
Hmm.
because our generation is able to have those conversations quite fluidly, we know that we have a lot of opportunity and we're ready to participate.
Hmm.
So I really agree, like with the kind of the optimism that was under what you said, just because I know that older generations weren't able to do that all the time.
Hmm.
There was a frustration about what was happening with technology and what was happening with AI.
Hmm.
And I've been surprised by the number of MAGA people that the thing they loved the most about the big beautiful bill was that like the empowerment of AI that was created. And I
Hmm.
was like, I thought you guys were like the data privacy and I don't want people to know if I have 5 different wives in 5 different states, and I don't want anybody coming after me for my
Hmm.
child support bills. But hey, let's get Palantir involved. No
Right.
men
Right.
skipping out on no men or women skipping out on their child support payments.
Yeah.
No more. Government's coming to
Right.
get you.
Yeah. Like this younger generation, I guess I don't. I'll say it this way, but it's probably not the best way to say it. But like, they don't really care about privacy. When you think about how they grew up and the apps they use, I mean, like privacy. Who they was signing. They when they was signing up, they was giving that stuff away, and they're like, I ain't got nothing to hide, so I don't care.
The amount of information that's out there on people, they like, yeah, it's true actually. This kind of the protection of privacy, and probably because a lot of people who grew up in communities where you weren't allowed to talk about sensitive things,
Hmm.
especially if it was like religious or political or racial. All those things were like, things you weren't allowed to talk about. But now in this kind of new society
Hmm.
that like, anti-woke, everybody should be able to say everything all the
Hmm.
time, no filters on. I don't know that I love that life so much, but I think that, people are also happy to like come on to something like Instagram or TikTok and be able to share their real lived experience. And sometimes
Yeah.
it's a very ugly experience happening like right next door, and you're like,
Yeah.
seriously?
Yeah.
I didn't know about any of that. But now it's out there. The question is then, how do we integrate that into the positivity of our future? Because a lot of information can just be too much information. They put it on the internet so they can
Yeah, I was
see
reading
it
some of the
if
comments
they
too.
don't
Yeah,
care.
seriously, like one of the other things I'll add is the Gen Zs. a lot of them were born after like 9/11. So think about it. When 9/11 happened, the NSA did the Patriot Act, which was,
Yeah.
basically you could spy. So again, they don't know what life was
I
like
never thought about
back.
this.
Yeah, you gotta think about it. Like they've never experienced life when there was no internet and things were private
Hmm.
and all of that. They don't know what that life is like. So
Hmm.
this is new. This is a new norm. You know.
Yeah,
So
crazy.
yeah, they don't care. Shout out to King Rev.
But you mentioned something when you were talking about the tariffs, and you were talking about
Yes.
tariffs that have been implemented on automobiles and steel and stuff like this. So something that's coming out this week in the economic data, which normally is like irrelevant and nobody really cares about, but it's the capacity utilization rate. So that's how much of like manufacturing is actually being utilized. And the other one is the industrial production month over month percentage. Now, the data has been like when you look under the surface has actually been cooling off. And some people think it's like multifold. So with utilization, people are nervous because of tariffs. So some aspects where tariffs continue to be a bit amorphous, they
Mm,
don't want to like be running at full capacity and then kind of get like caught in the middle of like a production stream and then the costs go up on them. So there has been until now this like hesitation in manufacturing utilization. So this week's data could actually be important. And one of the areas they highlighted was automobiles, like you mentioned previously. Um,
mm,
but also industrial production. So those
mm,
numbers, what they were saying is that a lot of people, like 1 year ago, when all the AI stocks were and robotic stocks, and we had the CHIPS Act and all of this kind of come in, people were expecting that industrial production number by this, like last year when they were looking at, the summer months of this year, they were expecting those production numbers to be quite a bit higher. Now, looking forward month over month,
mm,
people have been able to anticipate that those numbers would be kind of down. But when you look back at what analysts were thinking about productivity and the use of AI, they did think that we would be a little bit further along in the conversation than we are. And
mm.
probably that had to do with this kind of unknown reality of what will happen with tariffs, especially when it deals with chips, because a lot of that production data is related to like the data centers and chip production and things like that. So that data could actually end up being more important to how we see like the whole chip space, what's the word, earnings reports and stuff coming out, because it could be kind of a canary in a coal mine if there are productivity issues. So when you look on the economic data, if you only look for the red folder or orange folder information, you won't actually see that because it
Yeah.
has never been important. Um,
So
but
listen,
it
it's
could
so
be.
funny you said that because whole time when you was talking about it, I was looking at Forest Fire. I'm like, I don't see that. So I went to Trading Economics, and it comes out Wednesday, and I saw both of the reports you're talking about, the capacity and the industry,
Mhm.
and I'm like, I'm gonna have to read into that one a little bit more after this because you're right. I damn sure wouldn't pay attention. If it's not a red folder, I don't care.
But
uh,
it's funny because maybe a year ago we were doing, on one of the lives, I was telling people you have to look at the auctions, the 10, 20, and 30-year
yes, I
auctions.
agree with those.
They're super important because you will
Yeah,
get, if they're really positive, you can
yeah,
get like a 5, 10 point move on the
yeah,
S&P. And
absolutely.
there are like some people who were like, I started to like put that in my trade alerts
Yeah,
for, and I would watch, and you were totally right. And I was like, yeah, because
absolutely.
but it's a yellow information because
It
it
is.
wasn't
Yeah,
important for so many years. The other thing that will come out on Wednesday that is I think is also really important is the beige book. And the reason that
yeah,
July is so important is because so normally the beige book should get all the information from all the regional feds, the 12 regional feds, but the
yeah.
June report only got information from three. and I didn't know if that was like the standard or that was for like some reason. Maybe there wasn't any important information. But this week's Beige Book actually should have a much more comprehensive report from
Hmm.
the different regional feds. And that could also give us information about, like we are not, sometimes on like Instagram or like on the news, I'll hear all about like how Nebraska is falling apart because of migrant workers and stuff like that. And a lot of
Hmm.
those Midwest states, you don't hear, like they're not the manufacturing hubs, so you don't hear that much from their Fed representative. But
Right.
I have a feeling that this beige book may give us information about those states that are usually quieter. Um, but and because we are under a Trump regime, you would expect those states to kind of shut up and like kind of, toe the party line. But I
Hmm.
think that there's a lot of like negative economic sentiment kind of bubbling under the surface.
Hmm.
And that may appear in the beige book. So it may kind of again be another canary in the coal mine if
Hmm.
anybody is like super bored on Wednesday afternoon and wants to give the 60-page report a
Right.
read or chat GPT
I was
it.
gonna say, yeah, put it in Chat GPT, ask for an executive summary, you be all right.
And then you can put in different positions. If I am a barber in Atlanta, what's the most important piece of, if I am a
Yes,
cow farmer and a dairy farmer in Nebraska, what's the most important piece of it? Then you can get it to
absolutely.
give you
Yeah.
more feelings. But those things, normally they're just like I said, they're um, yellow folder events, but
Hmm.
I do think that that's becoming more and more important just to give you a landscape about like where things are going, what's kind of bubbling under the surface in the economy. And
Hmm.
sometimes it's actually more positive than you expect. And so, like Dre was asking earlier, like we've had one negative GDP report. Do we expect to see a second one? Well, something like the Beige Book is going to tell you what productivity is really like in
Yeah.
different sectors. And so if that comes out and it's giving a lot of red flags, then you might be like, okay, maybe recession isn't happening in every sector, but
Hmm.
potentially we have individual sectors where recession is starting to take place. And so those may be the areas of like an S&P or a NASDAQ or an IWM or a Dow or whatever that start to erode first
Yeah.
before you start to see like the whole market kind of take a breath down.
Right.
I don't know. That's just
Right.
ideas.
Yeah. No, I think you're giving some good clues on, again, that could be the stuff that comes out of left field. Remember, we basically said in the beginning, like, it's gonna be something that comes out of nowhere, and you're giving good clues and information of things that are definitely overlooked. I mean, I'll admit it myself. When you talked about the two, I'm like, I don't care. but that might be the thing that is overlooked. That, like you said, has the canary in the coal, and the people that catch that early are able to spot the disconnect, and Michael Burry that shit. Be early and be good. So, yeah, I definitely will keep those in mind. Like Dre said, noted.
Um,
For sure.
so we're going into earnings. What earnings are most important to you? That's what my daughter always says. What divergences are most important to you? I don't know where she learned this phrase, but she started
Just
saying it all
listen
the
to
time.
listen, kids. They will surprise you. They
Oh,
listen.
Lord,
They listen.
I know the
So
things my kids will say are scare me
listen,
sometimes.
hilarious. So before I tell you what earnings are important to me, funny story about like kids. So my daughter, my oldest, she loves hot dogs. So one day we was eating dinner where she having a hot dog, and I just made a joke. I'm like, you love those glizzies, right? Glizzies is like another name, funny name for hot dogs. So my wife comes to me the next day and she says, she's like, yeah, Kennedy came to me and was like, Mommy, did you know that hot dogs have another name? And my wife was like, "What are you talking about?" My daughter says, "Yeah, I love glizzies." I was cracking up. I was like, I did not know she went to you and said that. Yo, I was just dying laughing because I can't believe she said that. But I was like, yeah, I definitely told her that glizzies is another word for hot dogs. So just a funny moment. I was cracking up, bro.
Kids,
She's
they
like, yeah,
listen
I
to
love
everything.
glizzies.
Oh man, I don't know what oh yeah, this my son, he's always saying funny things. And
Uh-huh.
mostly it's because between the English and the German, it's not always the same. And so sometimes he comes out with things that I'm like, Please don't ever,
Don't
ever say that because no one is gonna understand that the way that
right.
he said." I mean now I can, of course, because we're talking about it, I won't be able to think of one, but very often he speaks like it's X-rated, but in his mind, it just made sense in the
Right.
German to the English. It was
Yeah,
like,
he's like he's trying to translate it. Listen, but yeah,
I'm like, don't.
kids say the darndest things. So just yeah, funny moment though. But all right, back on topic, right? As far as earnings, I am very interested in like I hate to say it, but it'd be cliche, but I mean the big tech stuff. The AI companies. I know we kick off with the banks, but I expect banks to continue to do well. I will throw
Mhm,
this out there and say, I think regional banks will actually surprise this earnings season and do
mhm,
really good. So KRE, the smaller banks, they might play catch up to their counterparts. I mean, you look at the
mhm,
JP Morgans, Goldman Sachs, all of them absolutely crushing it, killing it performance wise. And regionals have somewhat lagged, but if you actually go look at a few regional charts, they look like they're ready to break out. I mean, you go look at
mhm,
PNC, Truist, Ally,
mhm,
M&T Bank. Yeah, there are some really good looking charts when it
mhm,
comes to the regionals. So I think they'll do good. But in particularly, I am really focused on, of course, big tech and your AI darlings. What
mhm,
is how is the CapEx spending looking? Are we still seeing the boom that's expected? Because here's what I will say. That might be the real clue when things start to roll. When we
mhm,
see that first sign of any type of slowdown in AI spending, be ready.
mhm,
Like if that first sign of AI slowing, that AI spin slow, I think that will be a great clue that, okay, things are slowing down. If we don't see that, then the party keeps going. Uh, the third thing is, I do know that expectations going into this earnings season is really low. The bar is really low, right? Because
mhm,
of the last quarter being a negative GDP,
mhm,
kind of people expecting another one. So going into this earnings season, there aren't really high levels of expectation. So therefore, if we have a much better than expected earnings season, the party continues on.
mhm,
Right? Like that melt up that we talk about is just, this rally is hated. And if that plays out that way, it's only going to be more hated, meaning we're only going to go higher. Right?
mhm,
So yeah, I think, I'm really interested to see how this earnings season goes because like we were saying, nothing's really been able to take the market down.
mhm,
And if earnings season is better than expected, I mean, what catalyst do bears really have to say, oh, the market should go down, right?
mhm,
I mean, everything that they've been trying to throw at it, the market has been eating it up. So, now their next best hope is earnings are worse. Okay, if that don't play out, you in trouble, right? If you
mhm.
a bear, you in trouble.
Yeah, I think that,
So
at
yeah, that's my
last
take.
earnings, yeah, last earnings season, I think a lot of companies kind of saved their asses by doing the whole buyback. The buybacks was like the big thing. That's what
Mhm.
kind of kept them from like falling to pieces in the last earnings season. And then, they just kind of gave up on giving guidance and all this kind of
Yeah,
stuff.
yeah.
Um, And because of the fact that, like right now, okay, the market is slightly positive from where we opened up at the beginning of the year. There's a lot of like potential like gusto from here just because of the fact that like actually a lot of stocks, if you look month over month, like haven't necessarily done that much. And the
Mm-hmm.
other the
Mm-hmm.
other part is that you have a lot of companies still that haven't participated. I mean, the strong stocks have like just marched
Right.
along,
Right.
but your small caps and
That catch
lower
up
mid
trade.
caps haven't participated yet. So, if any of those start to like catch a bid and they can, some of them have now had really nice moves. But if
Mm-hmm.
they can kind of pop up over these consolidation and resistance areas and then
Mm-hmm.
get to the next part of the trajectory and move back
Mm-hmm.
to their all-time highs or test for new highs, then
Yes.
you're just everything else can get dragged up at this point because I mean the reality is I think that it's like less than 50% still haven't hit a 52-week all-time high. So
Yeah.
they
Yep.
still have room to run unless they're
Yeah.
falling apart. Um, and you have a lot of areas that are just like we could, because we didn't know what Trump was going to do, things like the space stocks, um, nuclear stocks, they were really nervous for a long time with Trump.
Mm.
But when he started talking about how much he was going to spend on defense, and now with the big, beautiful bill, I mean, there are a lot of areas of the market that were like, I don't really know like what this is going to look like. And those areas can continue to like keep moving. And
Yeah.
they
Pick
haven't
up.
moved
Mm-hmm.
that much. They can all look like Palantir in a year from now. So,
Yep.
that just gives more energy to everything else. Like you
Yeah.
said, just keeps the kind of flows
Yeah.
coming in. Because the thing is that sometimes people don't want to buy, like, they don't want to buy one thing. Like, they don't want to just buy Rocket Lab. So they
Right.
might buy like an ETF that's looking at all of those stocks. And then that just kind of brings all the flows with
Yep.
it. So,
Yeah.
I'm with you. I think also banks have some really nice setups. I think a lot of people are looking to see if, you know, people thought like when Trump came in that he would ease a lot of the banking regulations and that some banks would actually start doing like normal mergers.
Mm-hmm.
We've not seen any of that. We still only have like the forced kind of liquidations like with
Yeah.
Signature and Silicon Valley Bank. And I'm wondering if maybe during this earnings season they like put some hints out that, there's like some merger acquisition potential to be
Maybe.
had from these smaller banks. But I don't know. But I think that would be really positive for Trump because of the
Yes.
fact that he did kind of, campaign on easing banking regulations,
Yeah.
which would allow for more mergers. But I don't know.
Yeah. I would say I am a little nervous. I mean, again, I don't think banks aren't going to report well. I'm just a little cautious that it's not like a sell the news type of thing. Because I mean,
Hmm.
they have the big banks. Let me put it that way. They have really run
Hmm.
from those April lows into this week. And mainly I'm specifically talking about your J.P. Morgans, your Goldman Sachs. But I mean, if you look at like you said, some of these setups do look really good. I mean, you look at like a Morgan Stanley, a BlackRock. I mean, even Wells Fargo, Citibank.
Hmm. I
They're
really
like you
like
said, they got
KeyBank
some
and Bank
room,
of America and
huh?
US Bank Corp. My three
Yeah,
favorite
like and
are
U.S. Bancorp, I think would be considered like a regional or like a major bank.
mhm,
Might be
yep,
the classification, but yeah, like those smaller ones, like we said, like the U.S. Core, the MNTs, those setups look really good.
hmm. I'm with you
Yeah,
on
so
that.
it's just the major ones that I'm a little
They've
hesitant
already been
about.
doing the most. Where do they have to go from here?
Yeah, I'm
But
like, I mean, JP Morgan's at, all time highs, Goldman Sachs at all time highs. I mean, can they go higher? Sure, but I'm like, maybe they post, and this it's the typical. they have good numbers. The market will sell it down, saying, "Oh, it's priced in," when really it's just to kill the weeklies. They come down. Next thing you know, you look 2 weeks later, it's back at all-time
Mhm.
high. Like it just may be a temporary thing. So be careful playing earnings, folks. Because there are some conditions out there that could use a little bit of cooling off. But again, reaction versus the numbers is different. I think the numbers will be good. It's the
Mhm.
reaction that's always, the casino
Yep.
role, throwing the dice.
Yep. That guidance.
So, yeah.
ASML is also coming out this week, and
You
I
said
think
ASML, right?
yeah, I am wondering how that will, because normally Lam Research, Qualcomm, and ASML, their charts just always look exactly the same. Um,
They
like
do.
they just look the same. And so
Yeah.
I'm wondering if this week, even though the others aren't actually reporting, if oh, and TSM is also reporting.
Yeah, I
Thanks,
was gonna
yeah.
say ASML and TSM.
This is the beginning of the semiconductor
Well,
space.
TSM, um, they do some type of reporting where like every month they publish their like sales numbers or whatever. So it's never really a big surprise with TSM earning report like that.
Hmm.
Um, and I want to say it was last week when they came out and basically already said uh they were like up 26% in the month of June or something like that. So I mean, and with the way Nvidia been rolling and all that, I mean, TSM will probably kill it. They, I don't doubt they won't. What will be interesting is what they say about their Arizona plant, how that's coming along,
Hmm.
right? They've been doing some build ups and stuff like that. So, but yeah, I don't expect I expect TSM to continue to keep it rolling. If they continue to say, "Hey, their reports are good and everything is rolling," then that's good for your Nvidias, your AMDs, all of them people who use TSM to manufacture their chips.
Hmm.
If they say, "Hey, business is good and rolling," then we probably would expect decent reports from our other semi
Hmm.
companies. King Rail says Zay is itching to talk about ASML. So listen, I am extremely high on ASML right now. Right. The research I've been doing on ASML, I think it's really undervalued. I think there's a big disconnect in the market on ASML. It is the number one semiconductor in Europe. They make the only litany graph machines or whatever. I've done the research. They already are started to make the new things they need for the higher grade chips that TSM and them is manufacturing. Don't forget that again, we just talked about TSM's new build out in Arizona and stuff like that. Well, they had to order equipment from ASML to
Hmm.
build up that plant. So I think there's a big disconnect on ASML as far as just being undervalued. I would say, this is a good gem for anybody watching this. Look, this is how much I've been digging into ASML. For the last 3 weeks, they have been doing their share repurchasing under their program, their buybacks. Like, and I'm talking Monday through Friday, they've been like, and it's like 3 weeks. Matter of fact, let me look because I got to highlight it on the chart. Like I was like,
Wow.
oh, every week I've been seeing the little reports. Oh yeah, they just did more buybacks, and I'm like, oh, this so the week of June, the week of June 9th, they bought back shares. Then the week of June 23rd, they bought more shares. And then the week of June 30th, they bought more shares. Every single day, Monday
Wow.
through Friday, they bought shares. I posted it to Twitter every single time. I told my community, like, no, they another week of them buying, and they're buying in front of earnings. I don't know too many companies that would be
Yeah.
repurchasing their shares in front of earnings if they don't know something. And you know how we
Amen.
be like, we're like, somebody gotta know something. So yeah,
Exactly.
I think this report, I think they come out in surprise. And personally, if it does well, I wouldn't be surprised to see ASML easily blow back and get back to above 900 this week. We'll love to see it.
Ooh.
Yeah.
So I'm positioned for a move to 850. That's what I was seeing. Part of
Yeah,
it is
850 is
because,
just that's just the 50% fib level. So we get to 850, I even feel more convicted we go to 900.
yep, I'm look and one of the things I really like on charts, I'm gonna open it up so I don't lie. But one of the things I really like when I'm looking at a chart is, when you have these like flat top candles. And
Mhm.
when ASML was coming down, it really tapped up to that 880 level. And that it gave you those two flat top candles. And for me, it's definitely going back to that level. So
Yep.
yeah, we're looking
Like there's
definitely
liquidity
at,
there.
yep, the 850, 880, those are looking good. So yeah, 900 is just right around the corner. And with any positive volatility, it's going to can squeeze beyond. Now that you say that, it makes me actually think, like, am I positioned enough for this
Listen,
900 mark?
I look, this is not financial advice, but what I will say is ASML has one of the most prettiest setups. I think the fundamentals back it. It's one of those stocks where the conditions are really good,
Hmm.
and I would be totally surprised if the market gets this one wrong. Like if
Yeah,
this went against me, that's one of the ones where I like this is one of the ones where you just got to accept that, okay, I did everything right, just the market didn't reward me.
yeah.
Because I mean everything is in their case. All they got to do is deliver. If they deliver, again, I would be 100% shocked if the market did not reward this company, right?
I
What
agree.
I also will say this. I'd be interesting to see if Monday or Tuesday we get a little bit of manipulation because of the EU tariff stuff.
Hmm.
But even then, I still don't. I still think it's like that is exactly what I said. It would be manipulation because
Yeah.
when the earnings come out and things go well, it might just turn right back around and do what I thought it was going to do. But yeah, I
And it's
just
not overextended in this move. Like a
at
lot
all.
of stocks, you already see them like on an up move, and they've already given you like 8 zones and like 23 bull flags all the way up, and you're like, okay, that's too many flags for me.
And
It needs something else.
I saw a CNBC article that said it was an inverse head and shoulders. I'm not really the best at identifying those. But the article was saying, yeah, that ASML was a inverse head and shoulders, and if you did the measure move, I think it took it back to like 1,000 is what they were saying or something like that. So I don't know. I have really done a lot of legwork on this one, and so I'm excited. I
Mhm.
can't wait for Wednesday.
Yeah, I agree. I
Wednesday before the
like
bell,
it.
baby.
We're in long. So
Me too.
I'm
I'm
with
long
you.
too, so yeah, that's my disclaimer. I am long. I'm actually in March 2026's. Um,
Oh.
yeah, so I like to buy time
Mhm.
because I'll say this. Listen, if all goes well, and if you look at all the chips, and like to your point exactly, a lot of stocks have made it back to all-time highs and a little bit higher. This is one who
Mhm.
hasn't. So
Mhm.
if it's going to play catch up, do not be surprised if by March of 26 we are talking about ASML at 1250.
Yep. I I do not disagree with you. And for people who want to participate in Qualcomm and Lam Research,
Yes.
you
Talk
don't
about that.
want to wait for ASML to come out with their earnings because for whatever reason, those three stocks like to move in tandem. And I mean, it's kind of like NVIDIA, AVGO, those
Yes.
like to move to and then more AMD and MU move a little bit together, but
Yep.
ASML, Lam Research, and Qualcomm, they really like to move in tandem. And I think in part it was because all of them were kind of similarly priced before Lam
Yeah.
Research did their massive
And
like
that's
stock split and
stock split. Yeah.
ASML didn't. Um, So I think for many years they just always moved in the same kind of trajectory because of their pricing.
Yeah,
But they've carried on in the tradition. So if those other two stocks are interesting to you, you don't want to wait to
right.
get in because you won't get an in actually. You'll
And
end up.
to your point, look at Lamb. Lamb is leading. Of those
Mhm,
three, Lamb
mhm.
is the one that is the closest back to its all-time high. So Lamb could be that clue of what
I like.
ASML is about to do.
It was the pot. It's the canary that didn't die in the coal mine.
Correct.
So yeah, so I don't know if those on the chat, if you guys have any questions, it is top of
I
the
did see
hour.
some questions. Somebody said, asked about TSM increased volatility. Um, it was one earlier that I saw. What was it? I think it came
Yeah,
from Joy.
Dre has been asking
Yeah.
some killer questions. I've tried to remember them to go back and answer,
Nah, I
but
can see. So Dre had asked, one question he said was, are companies eating the higher costs from tariffs? Our profit margin is going to be impacted. Do we get two negative GDP readings? So I think we kind of talked about that one.
Mhm.
He mentioned that it was forecasted severances would start running out starting this fall. If that's the case, the data won't hit the wire until the fall or late in the year. So, you know, yep. Um, and then, yeah, so that was the gist of most of his questions. Yeah.
Super. I'm just looking up Lamb research here.
Yeah, take a look at Lamb. It's looking, that
Yeah,
one's
it's at
leading the
100.
way.
And the nice
Yep.
thing about Lamb Research, maybe more than the other ones, is, it almost reminds me of the IWM chart that you just had like almost 2 years of this like sideway consolidation. And
Yeah.
then you had this really clean sweep of the range. And then you popped all the way up. And normally when you see that like jagged double bottom where the
Yep.
like second part of the bottom is like a little bit more aggressive,
Mm-hmm.
your equal lows should run the highs that put in
Yep.
that low. So, I mean, just even looking at the charting setup, I mean, it's like 115 is there. And I mean, it is only a $100 stock. It's not very expensive. So people who
Correct.
can't afford the ASMLs or now NVIDIA, this is, I mean, it's not alternative one to one, but it is a good stock it is a very nice stock to consider buying. Um, so
Yeah. Yeah. I was just looking at some things. I think we covered. Yeah, we covered. Inflation, retail sales, tariffs, earnings season. Um, I think the interesting thing is truly these next 3 weeks are going to be really pivotal.
mhm,
Um, it's going to be a lot thrown at the market. Being that well, this is for me. This is the like last critical week of from the economic front as far as
mhm,
data, right? Like we got through jobs, we'll get through inflation, we'll get through retail sales, and usually once you get through that stuff, only thing left is really like PCE, which comes toward the end of the month.
mhm,
And like you said, we know we're going to kick off earnings seasons. And that's going to potentially, not even potentially, it will likely drive the last 2 weeks of the month. But what's interesting to me is that last week of the month,
mhm,
like, because that Friday actually brings in August 1st, that week too is super duper packed. Kind of just looking ahead a little
mhm.
bit, but literally that week we have JOLTS, private ADP, GDP, FOMC,
Mhm.
core PCE, NFP. The tariffs go into effect August 1st, that Friday, and that's
All the
big tech. I think that's big tech Yes, that will also be big tech earnings week because the week of the 28th through August 1st, we get Meta, Microsoft, Apple, we get Visa, we get Land Research, we get Coinbase. I mean, there's a bunch of more other ones, but that last week, oh my goodness. Oh man, that is going to be one hell of a week.
Hmm.
Yeah,
And
so
something that you were when you were mentioning about earlier that I wanted to follow up on is, you know, the like the situation now with Powell. Is he going to be is he going to resign? Is he going to be replaced?
yeah,
I suspect that if in this FOMC he doesn't cut, Trump will already say who he will nominate for
to
the
replace
as
him.
the
Yeah.
next Fed chair. Um,
Uh-huh.
so because Powell has less than a year left on his term, and I think that Trump will use that to create basically a shadow Fed president and basically have the other FOMC members start voting in coordination with the next president and not voting in line with Powell if
Yeah.
Powell doesn't cut in this
Okay.
coming
I don't think he's
uh
going to cut July. I mean, if I'm being, you know, going diving in a little bit more on this whole Powell situation, I think this is very unfortunate, right? I think
mhm,
it's unfortunate in that this man is trying to do the best job he can, and yet he's got like that micromanaging boss that's all over your back. Hey, did you do this report yet? Did you? It's like, bro, I'm doing the best I can do here, and he just has and I mean, Trump's not really his boss, but it's just he got somebody over his back, and this guy has been managing this situation as best as he can. He's dealing with the unknown, and it's just really unfortunate for him. I hate that he has to go through this. I think it's also very unfortunate that we're hearing this speculation about him resigning or being fired. Like, I would love to hear it from the horse's mouth, uh,
mhm,
per se. Um, to that effect, I did see somebody say something that I thought was pretty interesting, which that okay, so they were basically saying, hey, if Powell does choose to resign, it wouldn't be shocking if he did it at Jackson Hole.
hmm,
And Jackson Hole has always been that meeting where the Fed comes out with an update or
mhm,
whatever. They're, that's it's kind of like one of those things where it's always, that was the meeting 2 years ago when he laid out like, hey, we're going to feel some pain, right? It was
mhm,
also the time when he said, hey, we're probably looking at cutting back.
mhm,
So it would fit the narrative, I guess, of him coming out and saying, he doesn't cut in July, right?
mhm,
And it's already kind of being priced in or said that, hey, if we do accept the dot plot, that the earliest we were looking at a rate cut would be September.
mhm,
So go ahead, let me not cut in July. I stuck to my guns, but let me get out the way in August,
mhm,
and you
mhm.
have your new Fed chair. And September, the first thing the new Fed chair does is what? Cut rates. So
So
I thought that was like well thought out. I was like, hey, that makes a lot of
yeah,
sense. I mean,
I mean it
if that
doesn't
plays out that way, that would be like perfect.
yeah.
Uh, so
I
just something to
think,
think
oh
about.
man, I would feel so sad for Powell
I would
if
too.
he
Like,
was forced to resign. I think that would just be such a ugly look for everybody. Um, and right now, the dot plot and the 10-year bond
mm,
indicate like a two,
too
I
rate.
almost
Yeah,
said 2 years, two cuts this year. But the
yeah.
SOFR rate, the overnight
Lending.
lending rate, that is expecting slightly more. So there, between now and the end of next year, it looks like it is in their futures prediction, like forecast, they're expecting like
Mm,
6 or 7 cuts.
good.
So there is a little bit of a disjoint in the potential information where it is possible that we could get more cuts than the two. and for this year. But the reality is that like, do we need to cut? Is there anything happening that requires a cut? Is the labor market falling apart? Is it unemployment flying? Is
So
inflation, are we looking at deflation? Um,
here's
you know,
my,
that,
I would say, here's my take on the rate cuts. I don't personally, I don't think it's the rate cuts aren't for or about inflation or any of that, right? I think what it really amounts to is the country's debt itself, being
mhm,
that the higher these rates are, our our the interest to service that debt is it's over. It's more than the freaking defense budget. Okay, so they are really wanting these rate cuts to, in my opinion, because of that.
yep,
It has nothing to do with inflation. I think it has nothing to do with some of this other stuff that is out there. I think when you really get to the root cause of what is the issue about the rates being high, is that when the U.S. debt needs to refinance their
mhm,
debt or whatever, they're like, yo, this shit is costing us, and Trump says it, it's costing us billions of dollars. I need you to bring these rates down. I don't
yeah,
care about inflation. I don't care about, we are literally costing ourselves billions of dollars because
mhm,
these rates are so damn high. Bring them
yep,
down. You said if inflation came down, you would bring them down. Inflation is down, you still ain't bring them down. That is, to me, the core issue of what is
mhm,
really going on here, is that, and Scott Bessent, our Secretary of Treasury, he has also said these things of like,
mhm,
listen, we got to get these rates down because of what it cost us to service our debt. If we could
mhm,
get these rates down, we could refinance our debt, restructure our debt, and therefore the debt ceiling and the big beautiful bill and all that stuff won't be as much of an issue as the CBO and all of them are making it out to be. But as
mhm,
long as the Fed keeps these rates like this, it's an issue. So I think that is the true issue at
mhm,
heart with why the president and this administration really wants rates to come down. It has
mhm.
nothing to do with inflation. I think when you
Yeah,
really look
yeah.
at what it is costing us as a country because these rates are what it is, bring them things down. Like,
Yeah.
I even kind of agree. Like, we got to do something about this country's debt. You know what I mean?
Hmm.
And yeah, so I think that is the true issue at its core, and the difference between Powell and Trump and all of this craziness. So I
And
to
I
me,
think
that's
one
my
of the
opinion.
things that Bassett hates is that, leading like through the entire election period, they were just cussing Yellen for constantly like auctioning T-bills and increasing
Right,
the number of really short duration treasury bills.
yeah,
And the reason is because, she was like, I don't want to be locked in
right,
at 5, 6%,
correct,
for 5, 10, whatever, whatever years.
yeah,
Um, so now he's having to do exactly the same thing. He hasn't actually changed the percentage of T-bills or anything since he's had the power to do so. I mean, he
correct,
hasn't adjusted any of that at all. And because they're locked into these high rates. So, and that's again a reflection of why the overnight borrowing is just so high with
yeah,
SOFR. So I agree. I think that, um, now Powell is in a weird situation. Like, I think that if they can resolve as much of the tariff kerfuffle and like back and forth fluff, if they
hmm,
can just get that like bottled up and get the genie back in its place and then move forward, then it may give Powell cover to do a rate cut sooner than later.
yeah,
But as long as the tariff conversation is amorphous and ongoing and constantly changing, that's what gives Powell the power to say, well, we don't really know what things are going to look like 6 months from now. So how can we lean into rate cuts? And
yeah,
if Trump wants to gum that dog, he needs to end this weirdness in the whole tariffs conversation. He needs to just get everything laid out and then be done and stop using it as a carrot stick with every other country out there to like get what he wants, when in fact, all he ever wanted was 10%, and we've got it. So now
Yeah.
he can move on with our lives.
Well, he also wants other countries to lower their tariffs on us and open up markets for us to do more business,
Hmm.
or for America to be able to do more business. And that's like his negotiation tactic. But yeah, you definitely hit the nail on
But
the
it's,
head.
it's now we're
Yeah,
starting to get into this thing where we're like, in a catch 22 where we just need to get out of this
yeah,
roundabout and
we
like
do.
pick a
We do.
direction. Because the other thing, I mean, Trump and Bissett have been very successful at totally thrashing the dollar compared to other currencies. So
Yeah,
other countries are getting a massive leg up now
yeah,
on anything they do in the US dollar, because the US
yeah,
dollar is, the Dixie is below 100 now. I
yeah. It
mean,
was,
and
sheesh,
it
yeah,
looks like it can continue to bear flag down to the dumpster. So, he's, you know, other countries are getting a really great deal at the moment, and probably one of the reasons why that, they continue to invest in the US stock market,
hmm,
because they're getting a massive deal. And um, but yeah, they need to get tariff conversations out of the way, and then Powell will be forced by his own commitments to start cutting rates. And
yeah.
that's what
We're
they
doing
need from
something.
him.
Yeah, yeah.
So I don't know. July could get exciting.
Oh, it's gonna be exciting. I listen, Suzanne. I 100% think like things are about to get heated up. Now, macro aside, right? I love having the macro conversation, but in this Trump regime, what I kind of adapted now is I went to a more focus on price first, and like I said, by any excuse necessary, whether it's
Hmm.
macro, fundamental. I think us having the knowledge we have helps us educate and talk to those market participants who don't have as much knowledge and might be freaking out when they hear the whys, right? Because price will move and then, oh, well, it was because of this reason or that reason. We can clearly articulate to them, yeah, I mean, this is it. But at the same time, do we look at it as being totally scared, or is it an opportunity, right? I
Hmm.
think that's where we come in and we add value to people, is that we can really decipher the why, block, like really get through some of the noise and get to the core issue of what's really happening. People will say this is the reason, but don't really give more context, right?
Hmm.
But with that being said, focusing on price alone, in market cycles, I've been running with a Elliott wave thesis since, shoot, let me go look real quick. I've been working on this Elliott wave thesis since late April, right? After
Hmm.
we got the big bounce off the low, we had a pullback, and then we got that week of follow through. To me, that formed a low. Then we made a we made a swing low. We bounced up. We made a higher low, and then we made a
Hmm.
higher high, right? And
Hmm.
yet we weren't back necessarily to like the liberation day highs. So at that
Hmm.
point, I started to work on a Elliott wave thesis that, hey, the the drop from February down to the April lows was at just the ABC correction, right? So if anybody's familiar
Hmm.
with Elliott wave theory, I don't use it to really trade. I just use it to kind of help me understand market structure and where we could
Hmm.
possibly go. So I said, hey, okay, if that correction we just experienced was an ABC correction and I'm expecting a 5 leg impulse wave higher, what
Hmm.
would it look like? So once we got that low, higher low, higher high, I said, okay, I'm gonna
Hmm.
start working with this theory and see where we go. Now, if most people know about the Elliott wave thesis, is that wave three, which we are currently in, it has been verified because from that higher low, higher high sequence, we have now made it all the way to the 1.61 extension, which now
Hmm.
qualifies this rally we've been on as the wave three extension.
Hmm.
Now, this wave three extension, if you know anything about Elliott wave theory, wave three is the biggest push of all the waves,
Mm-hmm.
right? The thesis that I had us once we got to 6,200. That was the 1.61 extension. That's what made it like, okay, we are in wave three.
Mm-hmm.
From there, we could either roll over to start the wave four pullback, or it could go for the 2.0 extension, which would take the market up to about 64.56. So I was doing some price action analysis, looking at my signals and thinking about the quarter three, what that looks like, when the pullback come, this and that. And I don't feel the euphoria top yet. It's not here.
Mm-hmm.
I'm not feeling it. And when I go through my technical thesis, I'm like, okay, this week here could be a manipulation week. We could see a little bit of a sell-off or pullback. It's OPEC, stink price to get pinned. You know, we got a lot of economic reports. We kick off earnings season. So it would be the perfect excuse to kind of cool things off down again a little bit. However, when we get into week 3 and 4, like we just talked about, it's going to be a lot coming at us. And I think that's going to, if we get this pull back this week, or if we cool off a little bit, I think a lot, I think the retail mindset will be like, oh, here comes the turn right here. That's the
Mm-hmm.
top. We starting to pull back. And that's the perfect setup to get everybody start to go a little bearish. And then they are going to absolutely rip this thing those last 2 weeks. And by the end of July, the market will make its way up to 64.56, 6,500. And that is when I feel like we'll have that euphoric top. If you think about the quarter three and how that usually plays out, is you usually make your quarter three top in July, and then August and September is the seasonal weakness, right?
Mm-hmm.
So it would just make sense when you look at a monthly chart and all those things to rally up in July. Then you get your pullback August and September. Again, focusing solely on price. I want everybody that's watching this, if you start from 64.56, 6,500 area, and you do a 10 to 13% pullback, it will land you exactly in the China gap. Exactly in the China gap. How perfect would it be that you get everybody, we make this time. I mean, everybody, you go to 64, 6,500. I mean, people only losing their mind. Oh my God, we go to 7,000. That's what's going to be that top when everybody's like super duper bulled up. Just everybody's excited. There's optimism like you never had before. And then August, September is the perfect opportunity for the rug pull. And like we just talked about, you have seasonal weakness. You'd have the tariffs kicking in August 1st. That is when I can start to see something come out of left field. The narrative will start to turn, more negative. We'll get a 10 to 13% correction from, say, August to October. For those that love, analysis, go look at October 23. Literally, we topped
Mm-hmm.
out towards the end of July and pulled all the way back until about the end of October. I want to say that cycle ran for like 62, 71 days. It was like 11% pullback. And it was absolutely perfect. And then after that pullback, we ran into the end of the year and blah, 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 blah. But that entire analysis lines up perfectly with that Elliott wave theory I've been running with, which is we extend to the 2.0, which is about 64, 56, 6,500. That's where we get the end of wave three. Then we start the wave four pullback during the seasonal period. And then going into the end of the year, we'll get wave five. We'll push to the end of the year. And then 2026, buckle up, baby, because it's going to be a crazy ride. Midterm year, it's going to get crazy. Listen, I'm telling y'all now, 2026, man.
Like this year wasn't enough. This year wasn't enough.
You know what
We
happened?
didn't pull forward the crazy in the first 6 months of Trump. Oh my gosh.
Oh wait, listen, 2020, y'all, they are already, the seeds are being planted for 2026 already. Like I think people are missing some of the signs, right? You got one of the first signal for me was the fact that we know Powell will no longer be Fed chair.
Yes.
Okay, 2026. It don't matter if he get fired or whatever. He done. It's over,
Hmm.
right? Uh, Number two, don't let the market uh have another third year or a third year of another 15 to 20% gain. That's 3 years in a row where the market has had double-digit returns.
Hmm.
Okay. Number three, just historically, midterm years aren't the best, right? That's
Yep.
usually when you get pullbacks. Uh, Number four, by then tariffs and all that stuff will have kicked in, right?
Hmm.
So we're gonna have to deal with that in 2026. I think something else that has kind of clued me that there's going to be some drama is Elon with this new party. Everybody dismissed what he said. Elon not trying to form this party to be the president or whatever. He clearly stated, I just want to get 2 to 4 Senate seats and 8 to 10 House of Representative seats, meaning we will be the deciding vote. If you paid attention to any of the votes we've had this year on a big, beautiful bill or whatever, razor thin, one or
Hmm.
two votes really make the difference. If Elon is successful at getting those 2 to 3 Senate seats or 8 to 10 House seats, he's going to have a power like we ain't never seen a private citizen have power before. They
That
truly
is really
will.
true.
They truly will make a difference. And we're talking about in a midterm election year where now he ain't on Trump's side. And let's say the Republicans lose a couple seats and now you got a split House and Senate. Oh, I'm telling y'all, they are laying the seeds, people. Y'all better pay attention, man. 2026 is gonna be one for the books. I see it. I see it happening. You know, everybody may not buy into my vision, but I am paying close attention to the little seeds that they are laying, and it's too many confluences that just line up that I'll be prepared.
I'm getting prepared with you.
You know, we're gonna be ready, right? Anybody that
I'm like,
watches this
okay,
show is
I better
know
get my
we're
ducks in
gonna
a
be ready.
row.
But yeah, I'm just like you know, and one of my good friends always tell me, you know, you got to pay attention to what these wealthy people are doing, and somebody like an Elon who he laying the seeds. He's like, yeah, there is going to be some interesting developments in 2026 that you know, don't be distracted by the smoke and mirrors. Really pay
Hmm.
attention to what is going on. And yeah, let's enjoy this run, right? But
Well,
when
you know,
that
the amazing thing is that, you know, what Elon proved during this last election is the percentage of votes he can sway. And
yes,
the big failure that Perot and oh, what's the other guy's name that was like the third party candidate, um, the you know, and the Jill Steins is that they can never get above the threshold to be a legitimate third party. That's why
yep,
the Libertarian Party isn't a legitimate third party, and
right,
you always everything else is like um, you know, what do they call? There's like a specific name. They're not a legitimate party, but you're like
yep,
the other
yep,
candidate.
yep.
Um, they and the not well, what's the guy's name? He's like so tall, skinny, had like kind of a quirky personality, and he was the first third party candidate that almost came over the threshold. Just cannot think of his name.
Crap. Yeah, I think I know who you're talking about.
But anyways, but Elon has the power, especially because he can concentrate on 2 or 3 states where he has a
You talking about
significant
Elon,
amount of
right?
influence because of, yeah, Elon,
Yeah,
where he
yeah,
has a significant amount of power because of his businesses,
yep,
SpaceX, Tesla, whatever.
yep,
And you know, the thing is that if he consolidated that energy, he could easily become a legitimate third party. I mean, not him, but he,
yeah.
you know, could
He's right.
push
Yep,
for a legitimate third party and he could get it done. And that would be something no one else has done in
exactly. And his approach is totally different. That's why I think like that's
Ralph
why I think
Nader.
people
Sorry.
that's why people are dismissing him as this crazy guy who doesn't know what he's doing, but Elon is one of the smartest people on this planet. He knows what the hell he's doing. And his approach to this new American party and what he wants to achieve is genius. Like most third parties always try to go for the presidency. I can't recall, unless you just run as an independent, but I
Mhm.
can't recall a time where somebody said, "Hey, my goal as with this third party is to get a specific amount of seats with the goal of being the deciding vote."
Mhm.
That's different. And like you said,
Yep.
I mean, let's be real. He's probably one of the reasons Trump won again. He donated 200 some odd $1 billion. So we know he got the money to do it.
Mhm.
So it's not totally out of the question for him to achieve what he's trying to set out to do. And like you said,
Yep.
with the money and the backing he could provide a potential candidate, again, when you run for a House of Representative or a Senate seat, it's not as he don't have to donate or put as much money. Whereas like somebody running for president, so it
Mhm.
is a lot more achievable to get 2 or 3 Senate seats,
Mhm.
8 to 10 House of Representative seats.
Mhm.
So I'm like, look, people laugh now, laugh now, but when
Well, the other thing
2026 come,
is that
we gonna see
now
who's in the last laugh.
they're trying to change a lot of the campaign rules on funding. They're like now JD Vance is pushing through a
Oh,
lot of this agenda, and the thing is that they may be setting themselves up for failure because
yes.
if they allow people like if they allow for okay, so there's two things that they're trying to do. They're trying to basically make like unlimited campaign donations legal. But the other thing is that it used to be illegal for, or churches could lose their, or religious places could lose their tax exemption if they were seen as supporting a political party. And now they're trying to lift that. And there Elon has enough influence in like quasi-religious spaces that
Mm-hmm.
I think that if they got rid of that rule and places of worship could be promoting political candidates, I think
Mm-hmm.
people would be very surprised with how fast a little bit of his money would go.
Absolutely. Absolutely. Yeah. And I mean there's listen, we could go on and on, but there's some things we said that are now clicking in my head that make it only more viable, right? For instance, we talked about our younger generations and our generation. I mean, let's be honest. I know I'm personally tired of this two-party system. It doesn't work.
Hmm.
A lot of people want change, and
Hmm.
look, if Elon, if we, Dre said it, if he could get the right candidates, like some really good centrist people, like
Hmm.
Dre mentioned, Andrew Yang. I love Andrew Yang. He is so
Hmm.
forward thinking. He's young. He gets it. You get some people like that, Andrew Yang. It was another guy that I really liked that was a really good centrist. But yeah, you get some people like that. Yeah, he's gonna make a difference. They will
Yeah.
make a difference for sure. You
And
know,
you
and
just
again,
get Joe Rogan on that train, and that's it.
look, what? Yeah. So it's gonna be interesting. I'll just tell people, listen, we're talking a little bit ahead as far as time goes, but like we said, the seeds are being planted. So do not, you know, be surprised as
Hmm.
these things progress,
Yep.
for sure.
Yeah, I think that, I mean, I think you're absolutely right, and I love it. And one of the things the only thing that I would say to kind of like go back to positioning, you know, on the draw, a lot of long-term investment stopped. So people had a lot of like long-term positions way up, like expecting that things would just move straight up from Trump. And they didn't necessarily close up those long duration trades or
Hmm.
positioning. But as price was coming down, they weren't the positioning between where we were and where those out the money stuff was.
Hmm.
We didn't have enough positioning between. So like with Gamma, the thing is that first of all, you'd like as time as the position gets closer to expiration, that's when the gamma heats up. But the other enough positioning in any one, if you have enough positioning in any one strike, that can create like a false accelerant
Mm-hmm.
towards that positioning if it's large enough. And what I noticed is that a lot of the positioning that was out at the 6,300 and above on SPX, because it was just too far out and there was nothing sitting between, we would like look at gamma every single day and we were just like stair stepping towards our pins. And most of our pins were like 62.75, 62.75, 62.75 for
Mm-hmm.
like 2 weeks. 62.75 was
Mm-hmm.
like our gamma level. And you can see it on the chart. We just had straight consolidation for like an entire week and a half. But last week I was saying to our members, I said, we're starting to see new positioning at the 64, 64.50, 6,500. And part of
Mm-hmm.
that's because new positions are like, institutional investors are starting to double up on their positions that are up at those levels. And it's kind of igniting those 2026 positions, 2027 positions that have been,
Mm-hmm.
because like, I'll be honest, we had diagonal calls like all the way up at 64, 6,400, 6,500,
Mm-hmm.
66, and 6,700, like from way at the bottom.
Right.
And those are up like 300-400% now,
Mm-hmm.
just because we've like come so close to them.
Oh
But
yeah.
the thing is that there wasn't that much gamma there. There wasn't a lot of volume, and so or liquidity. So it was even
Mm-hmm.
difficult to get some of those positions. You'd have to wait 2 or 3 days to even get filled because they were just so far.
Right.
But because of the fact that I like remembered where everybody else already had their positioning, I was like, eventually when we start squeezing up there, like that's the thing with squeezes is that there's so much off, so many positions that are off sides that
Yep.
the broker just ends up like in this kind of like massive loop where you just end up squeezing irrationally to some weird place before
Mm-hmm.
you kind of totally fall apart. It won't be controlled like we saw at the beginning of the year because that was like 3, 4, 5 weeks of just rolling over smoothly before we started to really see like the,
Some acceleration.
tops down. Yeah.
Mm-hmm.
But so I agree with you. I think that, this euphoria can continue. And it's funny because if you remember in our last live of 2024, we were talking about like where do we see the S&P? And I was like 6,600,
Yeah.
6,500.
Yeah.
And we were like JP Morgan 300. And, we're only in June and we're only in July and we're,
Yeah. Yeah. And what's funny is when we had that correction, I remember we had a lot. We were like, we might have to adjust a little bit. And here we are, and it's looking like we didn't really need to adjust. Like maybe that correction was
hmm
just that was the correction that was necessary to get us to that 6,700 we were talking about last year.
hmm
You know what I mean? Because
Yep.
now it all looks like it's back on deck. Like
Yep.
yeah. And it's like 5:45. I do have a hard stop at 6, but
Yeah.
what I was gonna say is that so one other thing about that Elliott wave theory is if we do get up to the 64, 6,500 by the end of July, based on where we base out for the wave 4 pullback, right? Because the wave 4 pullback could go anywhere between your 0.38, 50% to 618 fib level, right?
hmm
So I ran some uh, analysis on if depending on what if we base out at those three levels, what does the end of the year run look like? And essentially, the range is if we stay at the higher end, like say the pullback is more shallow versus
hmm
deeper, then if we get a more shallow wave for pullback, it puts us on track to get to 7,000 at the end of the year. If it's the deeper pullback, you still end up at 6,700 by the end of the year.
And it's funny
So
because
like, it's still there.
I was listening to a podcast. I don't remember who the economist was, but he was like, people aren't prepared to see 8,000. And I was like, 8,000? What are you
But
talking
see,
about?
that's exactly why I won't say 8,000, but I think that's exactly why we can get to the 7,000
Hmm.
because nobody expects
Nobody's
it, right?
expecting it.
Nobody
Hmm.
expects it. Like we mentioned, the rally is hated. People are going to hate the fact that we're at 7,000. So we shouldn't be there. It's a recession. La, la, la. Like it's gonna be so crazy. But that's why I mentioned the two things I said. Like me personally, I don't feel the euphoria yet. There's a
Hmm.
lot of non-believers out there still that don't believe we can get to 6,700 or 7,000.
Hmm.
And the market loves to make believers out of doubters.
Yep.
So, you know,
Just in time to
yeah, just to get
to pull
everyone
the rug out from under. Too late.
so yeah, I mean, I'm at a place where, and this is what's so hard, is I do have certain signals that are like flashing warning signs. And I had to, I did some self assessment. And what I've noticed is that a good amount of times, and I've Dre still on and my community members on, we have another saying. We are often early, but rarely wrong. And so a
Hmm.
lot of times we'll be early and it may take some time to play out, but eventually it does. So
Hmm.
I'm looking at it as, yes, my warning signs are there. I see it, but so does everybody else. So
Yep.
therefore, we can continue to squeeze often early. And then when
Hmm.
it squeezes up and then everybody starts to become doubters, that's when I know it's time to strike. And then
Hmm.
that's where we'll be right.
Yep. I like that.
So,
Often early, but not often wrong.
yeah, we are often early, but rarely wrong. Like a lot of times we'll have a thesis on something and it's just we're a little bit early to the party.
Hmm.
And it's sometimes it's weeks, sometimes it's months, but we always, we have our sessions and sometimes we sit back and we'll be like, man, you remember when we was all down, look at it, you know what I mean? So it's just
Hey,
like,
I have to give it to you. You and Dre were all about AMD. I was not feeling AMD. I could,
now look, everybody back on the AMD train, right? Like it
but
was
I
so
said I was
weird.
like I was not in AMD. I was not in.
No,
I
but I
was.
mean, it's not even just you, but that is like the theme of the market. You know what I
Hmm.
mean? I'm gonna tell you, like, so I saw one of your videos. You were talking about Apple. And you were like, it feels like it's gonna roll over. I'm gonna tell you now, Apple about to run. Apple is about to run. I promise y'all.
You know, like you do like the double top. I know it's
This is my take on Apple. If you look at Apple's chart, it does look a little like that. However, that triangle it was in was 70 days, and that was breaking out to the upside. Now, yeah, right. It could be a false breakout, absolutely. However, I don't see how we just said the market gets to 6,700, 7,000 by the end of the year, and Apple ends the year negative. It doesn't happen.
yeah. That's I
Apple
okay. That I
and
can agree with.
so it's like, and once again, it's very disliked. It is, people are like, oh, they need to innovate. Oh, it's just it's getting hated on. And when something is
Hmm.
hated like that, that's the perfect time to get in because when Apple gets back above 225 and it gets to 250 and then it's break even for the year. Mind y'all, people, Apple has to get to 250 just to be flat for the year, right? When it gets there, they're going to come out with some big news, whether it's an AI purchase or something, and then everybody's going to be like, "Oh, Apple's going to 300." You heard it here first. Nvidia hit
Hmm.
4 trillion. Apple or Microsoft is probably next, and the price for Apple when it gets to 4 trillion market cap is 268. So you're
Hmm.
going to hear everybody start coming, "Oh, Apple's going to 268. It's going to 300. Buy it now. It's 211." Not financial
So
advice, but I'm just saying.
So we're in 230 calendars and 250 calendars.
Beautiful.
But the big for Apple, but the thing that I told everybody, I said it has like if it cannot break above 216, because that's where it has like a
Yeah,
massive
I agree.
supply zone and
Yep,
that's where it gave us
I
that
agree.
double top.
Hmm.
But I told everybody if it does not break below 193 when it's coming down, you have no closure for continuation. So you need to
You
get
caught
a
out by exact
body.
levels.
So you have to get the body closure for
You're right.
true continuation. We
You're
didn't
right.
get a body closure. We actually that we wicked to it once, we wicked to it twice. We and then the third time we were like right above it. So I told them, listen, our 230s and 250s might end up being okay because now it's possible we're creating a double bottom. And so if we have those equal lows run the highs, we can get back to the 250. The thing and here's the thing, right, is that I always position with Apple, it like I'm always doing like butterflies or calendars. So I don't have any theta drag on the trade. The thing that bothers me about Apple is that when it moves, it can move so slowly that if you're just in like naked calls, I mean, you could end up losing so much money just on
Yeah,
the time decay.
yeah.
And that's for me, that's what I don't like. So right now, even though my positions have, you know, we've done this back and forth, they're not even down like 5%. So I'm okay with that. But I told everybody, I said, now we're back in this supply zone. If we cannot get out of this, then the reality is we have to sweep something lower in order to get some kind of
It'd be
new
the 193
activity
level.
to get, yeah.
Yeah. But I'll say this. Third time's a charm, baby. We got the 214. We got rejected back in April, got
Mhm.
rejected back in May,
Here,
and
look,
here
I
we are.
even show you my chart so you know
Yeah, look, see, yep.
I mean, I have it there. Closure for
Yeah,
continuation. Nope. We're in the demand zone.
we
Hopefully we
are.
make it.
And here's going to be the beautiful thing. It's going, I personally think it's going to just, so if you look at it a weekly, go to the weekly,
Hmm.
you see that breakout candle. So we got a doji last week, but the candle the week before that, that breakout candle where it was like
Hmm.
6%.
I have to change my chart. Okay, yeah, I'm with you. Hmm.
All right. We're going to, if Apple chooses to do so, we'll have another weekly candle that looks like that. And it's going to go through your demand zone. It's
Hmm.
going to take all of that. We really could go from this 212 straight to 225.
Yeah. So we have Gamma Balance and Pin for August OPEX at the 230. Now I think that Apple has their earnings before August
End
OPEX.
of the month. Yep. We just talked. It's during that big week, so it's August
Yeah.
31st. Or
So
I
I
mean
think
July
that it
31st.
is
I'm sorry.
very plausible that we get to the 230 because what
Yeah.
has been happening is that with a lot of these stocks is that a lot of the positioning is on OPEX,
Yeah.
but then in the week of whatever, then a massive number of new contracts come in and then just like use that OPEX like positioning to like
Yep.
squeeze us to those positions like 1, 2 weeks early. So I
Yep.
would not be surprised if we have an end of month move because of the earnings
Yep.
up to that 230. Then I would expect just because of natural price action, I would expect to pull back to around the 216. And then maybe make another leg up to around the like 240 area if you're like just creating natural bull flags. Because
Yeah.
I mean, on the weekly chart, you're right. It has a very nice rounding bottom.
Very nice.
And we have those equal lows. So
Mm-hmm.
let's see if equal lows can run the highs.
Yep.
Let's see if it does its normal price action thing. And it broke out of that downward trend line. But at the time where I did the post, it had that double top and people were expecting it to just double top and then break out of the trend. And I was like, no, I don't think that that's
Now
how.
it's been in a
Hmm.
nice tight range.
Hmm.
And so, yeah, I think it's time. If there are two stocks that I am completely like bullish on, is Apple and ASML.
I
Those two are
believe
like
you.
those two are the two right now that I'm like, I'm being patient. I know I might be a little bit early. Not everybody on board yet, but it's just a matter of time.
Yep, it's true. AMD had the right move. You caught that.
Yeah, I
And
did.
and
Yeah,
part of that, this is kind of the weakness, right, of trading multi-leg option strategies is because you do kind of have to get the timing right, or otherwise what'll happen is you end up with short positions that are kind of like dragging the returns if you just
mm,
slap on too much time
yeah,
because of the fact that you're long and short every
right.
single setup because
Yeah,
you have all of that, whether you have a calendar, a diagonal, or a butterfly. But the nice thing is that you don't feel the threat of the theta decay because that's where people just end up getting hosed often
yeah,
with their positions. So, there's always positives and negatives, and that's one of the nice things about, when you see something like an AMD and you have a really strong conviction, just having a naked leap allows you to participate without having the threat of time if you can
yeah,
afford it, because often
yeah.
it's very expensive and people will be like, "I only have 5,000 in my account." So if I do a leap, it's like the whole
Right, that's all you
account.
got, right? No, I totally understand.
Mhm.
So yeah. So yeah, I think I got like 5 minutes.
Yep. No, it's the top of the hour. I think we've covered everything. We talked about
We
Powell, we talked about Elon, we talked about earnings, we talked about industrial productivity,
yeah,
we
we
talked
covered
about
it.
CPI, PPI. So if people didn't hear us talk about it the first time, you could always go, we'll chop this up and you'll end
Yeah,
up with all the clips in the Instagram and I'll tag you. And then everybody can whatever, hear all the feedback.
yeah.
But I'm def
There's a lot of clippable moments.
And definitely, if you are not following Trading with Zay, this is Zay's new trading Instagram. So please
Yes.
go give him a follow, give him a like. If you see something in his Instagram, share it, let other people know about it. He also has a Tuesday, Wednesday evening YouTube channel with the other Dre, because we have two Dre's now
Hmm.
in the group. So and do you say his
That's
name's
totally
Quadre?
quadri.
Is
Yep.
that,
Hmm.
yeah.
You got it.
The three gentlemen have this a futures show. They trade the Asian session. So
Yep.
if you want to learn how to trade or just listen to what people are thinking about as they are trading and making live decisions, then check out their YouTube channel and follow Trading with Zay. And thank you guys so much for joining us. And Zay, thank you for coming on and being my co-host for my first live back after
Yeah,
our
that.
move to Montenegro. So I
Nice.
appreciate it.
Yeah, definitely. And just to let y'all know, I know Suzanne hasn't officially announced it, but these will be more regularly. I think we're going to aim for at least 2 Sundays a month where I'll be joining her and being her co-host. So look forward to more of these type of discussions coming soon. We're working out our schedule, but yeah, I just want to let people know that yeah,
Yeah.
we'll be doing these a lot more regularly moving forward.
Yep. It'll be an official thing. And yeah, we appreciate you guys hopping in, asking all the questions. It makes it much more exciting for us when people are engaging with the content. So
Yes.
um, put this Sunday nights, or actually Sunday night for me, Sunday
Yeah.
afternoon, 4
So
p.m.
that's good for us.
EST. Get it on your schedule. It's 10 p.m.
Yes.
for me, but 4 p.m. for y'all. So, all right,
Yes.
friends, I hope you have a great trading week. And both Zay and I run Discord communities. So if you're looking for a community to trade with or just to have conversations like this during the week. Look both of us up. We're doing
Yeah.
different types of trading. Zay does a lot of swing trading and long-term investing, where
Yeah.
I'm doing more of the multi-leg option strategies. So yeah, definitely give us all a look. And also Dre 73 has also been up on the chat with us, and he also is helping support people who are trying to grow out their retirement portfolio. So all of us are in here. We'd love to see you guys in our communities, and we will see you guys well, I'll see you guys. We will see you in
Yes.
2 weeks. All
All right. Peace
right.
out, people.
Bye for now, friends. Ciao.